This is the Haulin Assets podcast, where we show you how to start and run your own trucking company. Ever wanted to go out on your own? Follow Chris as he goes through the highs and lows of running on his own authority.
Welcome, everybody, to the Haulin Assets podcast. This is episode number 181. Today, we are talking about 4 reasons, 4 triggers, 4 things that you can look at to know that now is the right time to start a trucking company. I'm your host, Craig. Over there, he's Chris. How's it going, Chris?
I'm doing well. How you doing, Craig?
Yeah, not bad.
Hanging in there?
Yeah, hanging in there. I'm looking forward to this episode because this is going to be an important one. We've been podcasting now, hold on to your seat, Chris, for over 6 years since you started Haulin Assets. And we've done a whole lot of stuff that people can go back and listen to. A huge archive, right? 180 plus now episodes. But this is going to be a really good starting point. If anybody out there, if you're a new listener, first of all, welcome. I know there's going to be a bunch of you on this episode. But if you're a new or a longtime listener and you want to recommend this show, you can tell somebody, hey, go back to episode 1. Or you can say, hey, try this episode. This is, I think, going to be a really good jumping off point for folks. Agree?
Absolutely. This is actually probably the most common question that I get from people is, when's the right time to start a trucking company? And so we're going to dive into that today. And the answer might surprise you because it's probably not what you think.
Chris is like a walking clickbait ad.
There you
Reason
go.
number 4 might surprise you. All right, Chris. So normally I talk about HaulinAssetsLLC.com and the Facebook and leave us a review and a message and all that stuff. That's all still true. But today we're going to be talking a lot about MotorCarrierHQ.com. So for those who have listened with half an ear or are brand new, Motor Carrier HQ, Chris, is a company that you run. It sponsors this podcast. We don't talk about it tons, but we're going to talk about it a little bit here. And that's because it's going to dovetail with a lot of what we're talking about. So be on the lookout for, as we talk about MotorCarrierHQ.com. Now, Chris, as is our wont, before we talk about anything important, let's talk about some unimportant stuff. Well, okay, less important stuff.
A lot of times we start off the episode, as most people know, with a story, and this one's a good one. It's something that started out that could have been really bad, but ended up really good, and those are always fun stories.
So is this you or one of the drivers?
One of the drivers.
Okay, and where are they?
South Carolina.
South Carolina. Okay, so what happened?
So drivers driving in South Carolina on the freeway, I-85, just going along, minding their business, clipping along at freeway speed, when all of a sudden one of the airlines break, and that causes the truck to lose air all of the sudden. Ooh. And so that means all of the brakes on the truck and the trailer engage. And so, this poor driver's just, like I said, minding her own business, and all of a sudden all the brakes lock up, and she just did a heck of a job keeping the truck pointed in the right direction and the trailer, and was able to get the truck stopped and most of the way off the road without hitting anything, without causing any damage to any other vehicles, to our truck and trailer. Just did a fantastic job. But that's kind of a super stressful situation, right? Yeah. You've got a driver that has gone through what's kind of a traumatic event. Like that kind of thing's scary.
So what, you want a driver, this is more a personality thing, and training is huge in there, but you want somebody who's not going to panic when something happens. And this would be one of those times. Some people are just prone to panicking in tough situations, and apparently she did not. She
did a good job, great experience, and just kind of that muscle memory kicked in, and she knew what to do. She handled the situation really well, and it went great.
So she's halfway off the road now.
But halfway off the road.
And halfway on.
Yeah, halfway on. Part of the truck sticking out in the back of the road, and you can't move it because it won't build up enough air pressure to be able to release the brakes and get going. And so, we immediately start looking for a tow company to come and tow. We get our first quote, and this is a 9-mile tow. Like, it's not
this isn't a 90-mile tow.
No, it's not 90 miles. It's not very far. And that first company's like, it's one of those where they're taking advantage of you, right? And you're like, oh my gosh, that's what you're going to charge to tow this truck 9 miles. And so we're in the process of trying to find some other options when the police officers show up. and the state highway patrol for South Carolina. And they did a great job. They secure the scene, make it safer for the driver. But they want that truck off the road, right? And they want it off the road now. So they're like, all right, we're not messing with this anymore. They call one of their contacts, that ends up coming out and hooking onto the truck and towing. And this is where the story kind of really starts to get kind of interesting, because the person that comes to hook up the truck is one of the owners of the tow company, Patterson Wrecker Service.
Okay.
And come to find out, the guy is also the mayor of his local town, just a few miles down the road.
Nice.
Ends up being a super nice guy with an awesome family. They take care of our driver, help her kind of settle down, feel safe, feel comfortable, because she's been through a pretty significant ordeal, a shocking ordeal. Yeah. And they do a good job with that, and get the truck towed to their yard. And this is kind of later on in the night. It's not super late at night, but like early evening that all this is happening. They get her situated, get her settled, make her feel comfortable. Like she meets the family. They make her feel like family. They get the truck repaired, in their own yard the next morning, and get her back on the road. And, it kind of gives you faith in humanity, right? When you hear a story like this, they don't know her from anybody, but they treated her like a human. They treated her well. Like they went above and beyond. Like that's not something anybody has to do. And they charged a super fair price for the tow and for the repair. And like, I can't say enough about them. If you're in South Carolina, it's kind of the north end of South Carolina, on I-85, and you need a tow, Patterson Wrecker Service, by far the best towing company we've ever worked with, and we've worked with a lot of them. Yep. Use them; they'll treat you right. It's
Patterson Wrecking, or Patterson's Wrecker Service. Yep. And for all of you, many, I'm sure, many residents of Blacksburg, South Carolina, vote the incumbent, right?
Yeah. Right. He's I'm sure, based off of what our experience has been with him, he's a pretty dang good mayor.
Nice. Okay. Well, it's a good recommendation, and sounds like, as you say, a traumatic story. So, Chris, we're talking starting a trucking company. Let's get into our main topic here. And as you say, this is a question that you get all the time. Chris, would you believe it? I get this question. Somebody knows or finds out that I am on this show, and they're like, okay, so let's drill down and let's get down to brass tacks. And I'm like, look, let me get you in touch with my buddy. Right? So I get this question: when should I start? Is now the right time? How do I know? All that sort of thing. And so that's what we're going to be talking about today. How else do you want to tee up this topic?
I think, like we've been saying, it's one of the most common questions that we get, and it's really a huge decision. It's a very personal decision, and we want to kind of help give you some ammo to help you decide when it is the right time, because it takes a huge leap of faith. Most people just aren't willing to take that big of a leap of faith really into the unknown. So those of you who are even thinking about it, I commend you. I really feel like the entrepreneurial spirit is one of the things that really makes the United States such a great country. So hopefully we can help you decide whether this is something you do or don't want to do.
Let me ask you a question, because as I said before, we're going to be talking about Motor Carrier HQ, and there are not only resources and online tools and tips and all those sorts of things, but there are people you can call, right? So if you're an employee driver, you can call someone at Motor Carrier HQ and have a conversation, get a consultation. Yeah. And what I was going to ask you is, if somebody does that, is it... How often do your folks say, now might not be the right time, or is it more likely than not that somebody's going to kind of get that nudge toward ownership?
We don't necessarily give you the yes, it is time, or no, it's not time. We're going to help you walk through the process, help you understand what you need to do it, and really let you make that decision. Like, that's not a decision we should be making for you. That's a personal decision. And one of the things that the kind of the culture we've created at Motor Carry HQ and how we work with our business coaches is we're not going to pressure you into do that. Like if you want to call and just have our business coaches kind of advise you on this, whether you want to start a business tomorrow or 2 years down the road, we're not going to put any pressure on you. We're going to just try to provide you the information you need to make a good decision.
Yeah. And, I was saying earlier, Chris, that typically this show is not meant as a commercial for Motor Carrier HQ, but we are going to be talking about Motor Carrier HQ a lot and extolling its virtues and all of that. So strap in, everybody. We are going to have a little bit of a commercial because it is a valuable tool in your belt as you're making the decision. You're making that leap. Chris, I think it's fair to say this is something that you're proud of and you want as many people as want to give you guys a call, right?
Yeah, absolutely.
Okay. So, all right, is now the right time to start your trucking company? You've got 4 points, 4 triggers to look out for, right?
Yep.
How do you want to set those up, Chris?
So the first 3 are things that are really within your control. They're things that you kind of work towards and dictate. And when one of those triggers happens, then that might be the right time. The 4th thing is not in your control. And I feel we're going to save it to the last because I feel like it's the most risky. There's some potholes that you can get into. You don't want to. Look at that pun.
Nice.
But you know what? It's also the biggest reason most people actually jump in to the trucking industry. And so I want you to avoid those pitfalls. So we're going to talk about the 3 triggers in your control, the 4th one that's not so much in your control, and what to watch out for if you do decide to jump in during that 4th trigger.
And as we're talking about these, as I understand it, you correct me if I'm wrong, you're setting this up not as all 4 of these conditions must be met. It's each of these could be an indicator that now is a good time on its own.
Yep.
Okay.
Each one could be a good time on its own.
Excellent. All right. So what's the first one, Chris?
So the first one is you need to be in a strong financial situation. And so that means several different things. I think probably one of the most important, if not the most important, is that your personal financial situation is in a really good spot. And so what I mean by that, when we talk about people starting their own trucking company, we recommend that they pay themselves the same wage they've been getting paid as a driver for the however long, or just a wage within that realm, maybe even a little bit less, but they need to have their personal financial situation in a spot where they can meet all their expenses only getting paid as a driver. Because the first year, at least that's all you're going to do. You're not going to take any profits out of the company. You're going to save money. So you want to be able to not have debt that is going to cause you problems later on down the road.
Okay. All right. What else do we need to know about that? So personal finances, you mentioned that specifically, talking about personal finances. Anything about business finance in here? Do you need to have tons of lending lined up and all that sort of thing?
So I would also recommend that you have to be able to cover all your startup costs. And what exactly does that mean? There's a lot of different things, a lot of expenses. And I've started multiple businesses, and every time I start a business, it always takes longer to get up and going. And it takes more money than I anticipate. But you always have to try to nail that down the best you can. And Motor Carry HQ has a really good tool for that. We've got a startup cost calculator that you can kind of go in and it'll show what our experience was when we started, all the expenses that we incurred. You can estimate on your own how much you think each one of those is going to be. And that'll give you a really good idea of what that cost is going to be. And so you just go to the Motor Carry HQ website. There's a calculators tab. You just go in there and you'll find it there.
Startup cost calculator. Do you have a ballpark, like what people should expect? 20, 30, 40 grand that you should save up?
It's usually between 20 and 30 grand to kind of get it going.
Okay, perfect.
There's some big variances in that. Like, do you already have a truck that's paid off, or are you having to buy a brand new truck? How much of a down payment do you have to put on it? that kind of thing.
Right. There's a million variables. I don't mean to say that that's what everyone should expect universally, but it's nice to have a mental benchmark at least. Okay, excellent. Other savings or personal finance things that we need to consider?
You should also have some money saved up to kind of cover any challenges that are going to come down the road. And that's going to happen. You're going to have unexpected expenses. You're going to have things that happen. You're going to have a truck that breaks down on the freeway because an airline broke and you have to get it towed. Like there's a myriad of things that are going to happen. So having some money above and beyond your startup costs that you can tap into is going to be invaluable.
Okay, perfect. Now, this is, would you call this entirely within your control, Chris?
Yeah, for the most part. I mean, it's
mostly.
So if you look at it, this first trigger is the one that you have the most control over, for sure, if not entirely in your control. So really focus on that and having that money, that financial stability. One other point that I want to make is that if you don't have this under control, it's also one of the things that's going to cause you the quickest problem. Everything else can go decently well, but if you don't have specifically your personal financial situation under control, you could still run into lots of trouble, even with everything else going well. So especially that personal financial situation, have that under control. That's really almost a must. Yeah.
Well, I don't know about almost, Chris, because as longtime listeners know, I also work with dentists. I'm kind of similarly on the outskirts of the dental industry. And so I get to see a lot of numbers there. You are not doing that when you start a trucking company. A dental office has like 35 to 45% profit margins. You are not operating with that, right? You have comparatively razor thin profit margins. And so what this means in this case is, Chris, you're saying, hey, your personal finances need to be in order. That's not just for the savings that you need to build up. Obviously, that's huge. But I'd say even more important is the habits that you built up to get there.
Yeah.
In order to create those savings, you had to, Dave Ramsey-ify your life and get financially disciplined, and that is going to be massive for you going forward in an industry that takes a shocking amount of discipline and work, right, compared to some others out there.
That personal financial stability is really a huge indicator of whether you're going to be able to be successful or not.
Okay. All right. So that's trigger number 1. Let's move on to number 2, Chris.
So trigger number 2 is you've got a really good source of high-paying loads.
So something lined up.
Something lined up. So let me tell you what this is not. This is not loads from a load board. The best paying loads and I'm talking loads that pay above market rate. So at the very best, typically you're going to get market rate out of the load board, out of the spot market, which is also called. So that's not where it is. You're typically going to find the best above average paying loads from direct shippers. That's by far the best place to go. They pay the highest rates, usually the most consistent freight. So maybe you've got a contact or an in or something with one of those direct shippers. And if you can get at least 50% of your loads from direct shippers, that's a really good trigger that it might be time to start a trucking company.
Mm-hmm. Yeah, it reminds me of, what's his name? The guy that we interviewed a few years ago who, that Daredevil, Evil Knievel kind of guy.
Bubba.
Bubba, that's right. And Bubba started his company because he had a really great load that he was going to be doing. Was running the same route over and over again. And on the one hand, you look at that and you go, well, what if that dries up? What if that company goes under or they go with another shipper or whatever? But if you've got 6, 12 months, 18 months, multiple years with that same direct shipper, then you have a company with some reputation and time behind you. And then if you do have to go to those load boards eventually, it's going to be a lot easier for you than starting from scratch. Is that fair?
Yeah.
Okay. So anything else on this second trigger? You've got a good source.
Yeah. So 2 other less common but still good sources for higher paying loads. Or sometimes you can find a broker that has really good freight that's looking for great carriers and will pay above the market rate. They're usually not going to pay quite as well as a direct shipper, but a lot of the times they'll still pay decently well. And so if you can find one of those, or the last one, and this is what Bubba did, is he found another motor carrier that he was able to lease on to.
That's what it was.
And they had good paying freight, and they paid a fair cut to the owner operator. And that's where you kind of have to be careful with this other trigger. If you're going to use another motor carrier operate under their operating authority, some of them are great. Some of them are not so great. You just have to do a really good job of vetting them. And we've talked a little bit about that in some previous episodes in more detail, but that's kind of, those things, either direct shipper, a broker that pays higher than average, or another motor carrier that you lease on to as an owner operator that gives you a fair cut in good paying freight. So those kind of encompass that second trigger.
Okay. Let's move on to the third trigger then, Chris. What else you got?
So the third trigger is you can operate at a lower cost than your competition. And this is really very common for owner operators. As an owner operator, you don't have the same level of overhead that bigger trucking companies have. And so there's some things that you can do as an owner operator to kind of lower those costs, keep them down, and operate under a cost lower than your competition. So in that kind of a situation, you might still be able to get market rate freight, but still be profitable because you've done a really good job of controlling your costs.
Right. And I can see how you've got this progression going of stuff that's almost entirely in your control. And now we're down to number 3, where this is not necessarily entirely in your control, but you do have some. You can look around and see the shippers out there who are, they've been working with a giant national company forever. And you're like, well, I can undercut those guys.
Yeah.
Finding those and recognizing those opportunities is what you're talking about, right?
Well, that's kind of the revenue side, but the controlling of the expense side. Mm-hmm. And let's talk a little bit about some of those expenses that you have a little bit more control over. So, first and foremost, kind of before we really even get into that, to be able to know if you operate less expensively than your competition, you need to know what your operating costs are, your cost per mile. And that's where the other calculator from Motor Carrier HQ comes in. We've got a cost per mile calculator that you can use, based on your typical expenses. And you can kind of go in and you can add what you think each one of those line item costs are going to be to the calculator. And you can estimate what your own cost per mile is going to be. And if you could run that cost per mile, at least 10 to 20% under what you're getting in market rates, like if you go out to that shipper or the load board or whoever, and you can find freight in your area that's a good 10 to 20% over your cost per mile, then you're probably in the realm where, hey, this trigger might make sense.
So there's a calculator online at motorcarrierhq.com that people can use. But if I'm listening to this, Chris, I'm thinking, well, how do I know what numbers to put in if I'm not running on my own authority yet? I don't know, some of these variables that you're going to ask about. So how do you overcome that sort of situation? That's
a good question. It just requires a lot of research. You like, for instance, fuel is going to be part of your cost per mile. Start researching fuel cards and get a good idea of what your fuel costs are going to be. And that's one area where you can save a little bit of money is by having a good fuel card. FuelStream, another one of my businesses has a really good fuel card where you're going to save, easily $500 a month in your fuel costs. Maybe, we have clients that save $1,000 a month. It kind of depends on where and how you fuel. But the fuel card has some great purchasing power. So finding a fuel card like that, like FuelStream, is going to make a big difference. Making sure you've got a truck that you're watching your miles per gallon really well. And typically as an owner operator, you're going to be more conscious about how hard you're pushing the truck and how much fuel you're burning. And that's really just how you drive makes such a big impact. Most employee drivers, and I've dealt with a lot of them, they don't really care a whole lot about miles per gallon. And so they're hitting the gas, hitting the diesel, the pedal, the accelerator as hard as they can. And it burns more fuel, like it easily half a mile per gallon more to a mile per gallon more difference, and that is going to have a huge impact on your bottom line.
Right. It's so, this is exactly what I'm talking about, Chris, when I talk about profit margins, where you're like, wait a minute. So now I have to actually really pay attention to how hard I'm accelerating. Yeah. The answer is yeah. And you will. And it's not a knock necessarily against employee drivers. It's just, this is the human condition. You're never going to care about someone else's business the way you care about your own.
Absolutely.
It's impossible, right? And so yeah, when you get behind your own truck of your own company, suddenly that, I think it's like becoming a parent, Chris. It naturally flips some switches.
It does.
Where you're going to pay more attention to those sorts of things.
And like you said, it's not a dig on drivers, but that's just kind of the reality of it. You know, the difference between driving 75 miles an hour versus 65 miles an hour as far as fuel consumption goes is huge.
Mm-hmm. Okay, good. So, what other points on this? Operating at a lower cost. I can absolutely speak English.
A lot of things that you can do too is just, you know, maintenance and repairs. You know, finding a good mechanic that's probably not a dealership that can handle 50 to 75% of the maintenance and repair issues that you have on the road. That's going to manage your costs fairly well. And then if you're technologically savvy, and this is huge, if you can do some of your own minor repairs, like if you can change out an airbag on the truck, or if you can, you know, fix air leaks and do all those kind of things, that's going to save you a ton of money in maintenance repairs and help lower your overall operating costs.
Okay, perfect. It's continue your education, right? You've been driving, now figure out what you've been driving, learn it, and use that knowledge. Okay, anything else?
So one point that I want to make here is, again, owner-operators have a huge competitive advantage here. And as an owner-operator, it should not be hard for you to undercut your competition and operate less expensively. As soon as you start to hire drivers, that competitive advantage, I wouldn't say it completely goes out the window, but it becomes much, much less. Like when you have a driver that's not you, you're less in control of things, more likely to have things go wrong. And, you know, some of those competitive advantages that you have as an owner operator are going to go away.
So if I'm hearing that, then what I'm hearing is don't ever try to build a fleet. I don't think that's what you're saying. So let me ask you this though. As an owner-operator, if I go through my entire career as an owner-operator and I'm driving truck for 35 years as an owner-operator, would it be fair to say that if I do it right, I'm likely to earn a good living and be just fine that way, right? Yep. But I'm not very likely to build a lot of wealth, right? It's that larger business ownership that can bring some of that in. Is that fair?
That's a perfect way to put it. Like, I think most people can operate successfully in this realm as an owner operator, and make a good living. Like you said, that you're not going to get rich, but you're probably going to make a good living. And if you do it right, and if you're smart about it and you're disciplined about it, you should be able to do better than if you're driving for somebody else. You're going to have a little bit more stress. There's going to be some things that come along with that. But, once you start hiring drivers, expenses start to pile up and the stress starts to pile up and you start to lose control on certain things. And so, if you're looking at using this trigger, this third trigger, the operating at a lower cost trigger, I think this one's almost exclusively for owner operators.
Okay. So if I'm hearing that correctly, then would this be a secondary trigger then, Chris? Because this is like something to be aware of, that you have this competitive advantage at the beginning. Is this really a trigger so much as it is just an awareness play?
You have to, I would say it's still a trigger. And the reason is because you have to make it a trigger. You're not automatically just going to operate at a lower cost. Like you've got to be conscious about it and be what am I trying to say here?
Yeah. You're making
deliberate.
Yeah, there
You've got to be
That's
very
exactly the word
deliberate
I was
about
going for.
what you're doing. And if you are deliberate and you take that seriously and you look at ways to cut costs, then you should be able to, and you should be able to operate better than your competition.
Okay, perfect. So we've had 3 triggers that are to some degree within your control. We've talked about being in a strong financial position personally. We talked about having a good source for high-paying loads, preferably a direct shipper for at least 50% of your loads. That actually reminds me of when I started my own business, Chris. I had a trigger. You were a client already, and then when I had someone else come and knock on my door, I took a look at the math and said, oh, this is my jump off point. I'll need to get 1 or 2 more, but I can work with this, right? So this is a familiar trigger for me as well. And then the third one, operating at a lower cost than your competition, recognizing that you can, and then putting in the effort to actually do it is your third. All right, now the fourth one you said is somewhat out of your, or entirely out of your control?
Yeah, I would say it's pretty much entirely out of your control.
Okay.
And what it is, it's really the freight market's strong and it's paying above average rates. And even on the spot market or in the load boards, you can find really good paying freight. That's not the market we're in today.
Wait, what?
That's not the market we've been in the last 3 years. I feel like I'm going to say this for the first time in a really long time. It feels like it's starting to shift a little bit in the right direction.
Okay. Yeah. That used to be when I wanted to put that on a t-shirt. I feel like the market's coming around, and then, that kind of disappeared.
I think it kind of is a little bit. We'll keep our fingers crossed that it keeps going in that direction. But
okay.
So a strong market where you can get above average freight rates. And again, like I said at the beginning, this is the reason most people get into trucking. But I think it's the most risky, it's the most dangerous, and it has the most pitfalls. And we're going to talk about what some of those pitfalls are, why I feel like it's the most risky, and some of the things that you can kind of do to mitigate or lower that risk.
Yeah. Okay, good. So if you're watching, I am anticipating some of what you're going to say, Chris, which is if you're looking at the freight market and you're trying to predict or understand the market, well, sei gesund to you. Good luck. And let us know if you crack the code, because you're the first one. Yeah. It's incredibly difficult to predict the freight market. I should say it's impossible to do it, right? So what you're talking about is people observing that, hey, the market has swung upward. Things are looking good. Now is my chance to jump into the pool, right?
But one of the reasons it's so risky is because of the timing of it, right? Are you entering a strong freight market at the beginning of it? And if you're at the beginning of it and you can ride it all out, that's going to give you some advantages. But if you're entering it near the end of the strong market and that market's going to tank shortly, your timing couldn't be worse. And that's going to cause you all kinds of problems. And so, that's one of the reasons it's so risky is you just kind of never know. Are you at the beginning of the market? Or are you at the end of the market? And,
is there any thought occurs to me? Is there anything to the idea that part of what makes the freight market eventually go down again is all these people jumping in the pool? And now you've got, hundreds or thousands more small carriers and owner operators who are in the market driving those rates down. And then, not all of them make it. And eventually that allows the market to correct again. That's
always a significant contributor to the up and down cycle of the freight market. And in fact, I would say, the post-COVID era, that's the biggest contributor to why it's crashed so hard. Post-COVID freight rates got really, really, really good. So a lot of people got in. It created a gluttony of motor carriers out there. And for the last 3 years, motor carriers has been going out of business. It's caused, I think we've finally gotten to the point where it's finally starting to turn around, as you've essentially got an equilibrium between the amount of freight out there and the amount of trucks ready to carry that freight. And I think they're kind of really right at that equilibrium right now. So as soon as, freight demand increases, which I think it will, like we're seeing, over the DOT blitz, safety blitz, inspection blitz in May, when some trucks drivers just say, hey, I don't want to deal with it, I'm going to take the week off. We saw a little bit of blip in freight rates. Over Memorial Day, we saw it. And right now we're entering into the 4th of July weekend, and we're seeing a little bit of increase. Those increase in freight rates over those short period of time is because, a lot of more drivers are taking time off over the 4th of July weekend. And so the number of trucks on the road goes down, and it's causing freight rates to go up. In, the last few years when that's happened, there's been such a overabundance of trucks that when those weeks happen, the excess trucks have just been able to absorb that excess capacity. Well, because it feels like we're at an equilibrium now, they're not able to absorb that, and we're seeing increases in rates. So I'm cautiously optimistic that the market's changing.
Okay. All right. So we're talking here about pitfalls. So the trigger that we're talking about is a good freight market. And then that pitfall that you're mentioning here is, watch out. It might not be that way. It will not be that way forever. And so that might not be the best reason to jump in. What's another pitfall that people need to be aware of?
So a good, strong freight market can cause a lot of people to develop some really bad habits because you've got this high revenue that's coming in. And so you don't have to track your expenses very hardcore. You don't have to be deliberate about it. It's, for lack of a better way of putting it, pretty easy to make money. Just about anybody can in a strong market. But then you develop those bad habits. You don't manage your expenses. You don't watch that really closely. You don't develop good relationships with direct shippers because you can get good freight on the spot market. You grow too fast, and this is a big one, and it traps a lot of people. You see all this money coming in, you're making a good profit, and rather than saving it, they go out and buy that fancy new pickup truck that they wanted, or they go out and buy that, that house that they've always wanted. And the problem is you've got a truck payment that you're still going to have to make even when the market goes down, which is going to happen, and guaranteed it's going to happen in that life cycle of those truck payments before that loan gets paid off. And a house is even worse. And so you really got to be careful of things like that. We'll talk a little bit more about managing some of those risks. Okay.
All right. So yeah, don't develop any bad habits. that would be the pitfall here. All right. Another one that you got for me?
Those are kind of the biggest pitfalls. So let's maybe kind of switch gears here and talk a little bit about how do you mitigate those pitfalls. So the biggest and most important thing is when you have that strong market and you're making pretty good money, put a lot of that money into savings. And, save it for a rainy day because the market's going to go bad at some point, and you need to be able to weather that. And another good way that you can weather it, and you can even increase your profitability in a good market, is really be a stickler about those expenses. It's tempting not to worry about it because you don't need to worry about it, but still be super deliberate about your expenses. Make sure you're paying as little on fuel as you need to. Make sure you're maintaining those good maintenance relationships. Do all that to manage those expenses so that when the market does turn, you still have a fairly low operating cost. You've got additional money saved up, and you're going to be able to weather the storm well.
Right. So that really dovetails nicely with the first trigger that you talked about, which is your personal finances, being in a strong personal finance position. And it's almost like a great way to practice, right? Okay. So my goal, I'm putting myself in the shoes of an employee driver right now, and I'm looking at my career and I say, all right, I have a goal that I want to retire when I'm 60, 65, 70, whatever the age is. I have this goal that I want to retire because I've been a successful owner operator or small fleet owner or whatever for my career. Okay, that's the goal. Well, first I'm going to need to start my company. And now my goal becomes I need to save up enough to make that a viable path. All right. Now, Chris, this is me talking now. If I'm that employee driver, you tell me, or, I go on Motor Carrier HQ and it says, yeah, in your situation, you're probably going to need to save 25 grand to start that company. And I look at that and I'm going, okay, I'm going to save 50. I want some working capital at the beginning of my time as an owner. And if I can be disciplined enough to get double what was recommended, then I know that I've built up the habits to avoid that pitfall that you're talking about here. That I'm not going to go out and buy the fancy pickup immediately because I just spent a year or 2 years or however long it took being so disciplined that I could build up my cash reserves to start the company. Is that fair?
Yeah, absolutely.
Okay.
Great point.
All right. What else you got?
So another thing, and this is really a key to success that most people don't think about or they discount, and that is in a strong freight market where there's less trucks than there is freight to go. It's the easiest time to start building relationships with direct shippers because they have a huge need for trucks and they're having a hard time finding them. And so if you can go in, that's when they're most likely to open the doors, they're most likely to have conversations with you. And so that's the time to go in and start talking to them. Even if you can find a little bit better paying freight on the spot market or in load boards, which sometimes you can, still be disciplined and build those relationships with shippers. Because once the market turns, those relationships are going to become super important because that's the only place you're going to find good paying freight. And that's the only place you're going to find consistent freight. And so develop those relationships during a strong market because that's when they're most likely to give you the time of day.
Right. Okay, good. I love that. And I'm going to put myself back in those shoes again. I'm thinking about starting a company. So I haven't started it yet. Can I begin the process of building my network and reaching out to direct shippers? Could I send somebody a quick email? You don't want to obviously be annoying because you can't ship for them yet or you can't haul for them yet. But can I reach out to somebody and say, hey, look, I have a plan in 12 months. I'm looking to start this company. I'd love one day to work with you. What are the problems that I can solve for you when I get there? What are the things I can, right? Yeah. Would that be a good way to start building that?
That's a great way to start. And that's a lot of the times what we do. And just, what are the problems we can solve? What are you looking for in your best carriers? Mm-hmm. How can I meet that need? And that's a great way to go. Okay.
Love it. Any other points you want to make on this?
Yeah. One more. So we've talked about your personal financial situation, that trigger one, making sure it's strong and solid. And in a really good freight market is when it's the most tempting to let that slip. And so you just cannot take on additional debt or expenses that you're not going to be able to cover once the market turns. And so here's kind of what I recommend. You want to save up some money. That needs to be the first priority. Save up a good cushion while the market's really good. But if you get to that point where you feel like, okay, I've got enough of a cushion, I've got some extra money, I want to do something with this money, that doesn't mean you just go out and, buy a pickup truck that is going to have a huge monthly payment that you're not going to be able to cover if the market turns. If you've built up enough cash that you've got your savings and you've got enough cash to pay cash for that truck, by all means, go ahead and do it. What I'm saying here is just don't take on extra debt.
Right.
Same thing with the house. If, say just for I want to keep this really easy, numbers simple. Say your monthly kind of house allotment, what you've got is $1,000 right now. And you're making that fine. You think you'll be able to make that fine forever, good market, bad market. You can make that as your driver's pay. Well, start saving up enough money if you want to get into a nicer place or a bigger house or you want to buy your first home. Get enough of a down payment so whatever loan is left over, you're still only making that $1,000 payment. So that may mean you've got to come up with 20% down or 30% down or maybe even 50% down. And so maybe that, kind of delays things a little bit, but save up money so you can make that down payment so your housing allowance payment doesn't change or your truck allowance payment doesn't change. Does that make sense?
Yeah. No, it makes perfect sense. All right. So we've had a few triggers now, some pitfalls to avoid. Any last thoughts? Shall we wrap this up? Or do you have any more points on that one?
Let's wrap it up.
Okay, Chris, we've had 4 triggers. Personal finance. I'm not even going to try to do this from memory, Chris. All right, I'm not that smart. But we've got your personal finances are good. They're in a good spot. Second, you've got a good source for good paying loads, whether that's direct shipper or a great relationship with a good broker. Third, you can operate at a lower cost than your competitors. And then fourth, the freight market is looking good. And yeah, we did go in order from in your control to out, and almost entirely out of your control. So, and like I said up front, you don't have to meet all of these conditions. Any one of these could be a trigger for you to jump in. But with that fourth one, of course, you want to be very careful about that. But that doesn't, when you're saying be careful about it, you're not saying don't do it.
Yeah, I'm not saying don't do it. I'm just saying avoid those pitfalls that come along with it.
Good. Awesome. What did I miss in my roundup here?
I think that's it. I think that's a pretty good summary. Hopefully what we've talked about today will help listeners make that decision. And really, it's a very personal decision, something you need to think about. And if you're so inclined, pray about. And just, make sure that you're in a good spot and you're ready to actually do it.
There you go. Chris, this is great. And we've talked a lot about kind of the theory of what to look out for and some of the specifics, but just to put a little bow on next steps, what can somebody actually do about it? Well, I warned you guys. You knew it was coming. motorcarrierhq.com. Yes, these are general principles we're talking about, but as a practical matter, if you're wondering what you can do now, today, what's the next step I can take, go to motorcarrierhq.com. And I say it once a week, and it's become kind of rote when I say it's where you have the tools and the tips and the people to help you make that leap from employee driver to owner operator. Well, this is what we're talking about. These are the kinds of trigger events that Motor Carrier HQ can help you recognize, can help you act on, and get yourself ready and be successful right out of the gate.
Absolutely. We've got on the Motor Carrier HQ website, we've got a whole bunch of tools, a trucker guide, the calculators, a bunch of other things. Go there, look at that, give one of our business coaches a call. Like I said, whether you want to start tomorrow or you want to start 2 years down the road, let our business coaches kind of walk you through the process so you know what you're getting yourself into. They can give you a good idea of what it's going to take. And again, that's just going to be more ammunition to help you make the right decision for you.
Yeah. And I'll just leave everybody with this. Not everything at motorcarrierhq.com is free, but a lot of it is. Okay. There's a lot of stuff that you can do without paying a dime right now to start educating yourself, start understanding your next steps in the process. All right, Chris, is that enough of a commercial?
I think that's, yeah. I think
does it make you uncomfortable?
It is a little weird. It's I would say of the 181 episodes we've done, this is by far the most where we've talked about any one of my businesses.
Well, we did do one on Fuel Stream, and people should check that out, by the way. There was, if you search in our archives, you can look at the Fuel Stream episode. If you're looking for a really great fuel card, etc. It's more than just a fuel card, but Fuel Stream is good. But no, motorcarrierhq.com. We talk about it often, and this is why, this is what it does. So we hope that you will avail yourselves of that resource and enjoy a long and fruitful career. You know, Chris, sometimes when you talk, I'll be honest, it sounds like you're saying, hey, live like a pauper for the rest of your life, right? That's the only way to have a successful business. And that's not what you're saying. You want to be smart about your finances and don't go buy the pickup before you're ready. But starting your own trucking company makes it more likely that you can afford those things down the road. It takes a little discipline. It takes a little stress, especially up front, but the rewards can be immense. It
takes a little bit of sacrifice early on, maybe for the first year or two, so that you can, hopefully improve your lot in life for many, many more years to come.
All right. Well, thanks everybody for listening. Chris, I will see you in a couple weeks.
See you then.